Managing Director, Chief Investment Strategist for Private Wealth, Anastasia Amoroso. All right.
Good to see you, Charles.
Good to see you. So yesterday, the CEO, I think it was Apollo, he said there's going to be some bumps in the road, though, for this area, for this niche. How do you see it playing out?
Well, that's right. Look, the asset class has grown a lot, from 600 billion in AUM to 1.7 trillion. So something is likely to happen. And we have seen a little bit of an uptick in the default rates. But Charles, we kind of did a health check on private credit recently. And when I look at revenues and earnings, for example, for the private credit middle market companies, they're stable, they're positive. So all is good there. The other thing I would say, if we look at the leverage in private credit or private equity-backed private credit, it's at the lowest level since 2009. Right. So I would actually argue that we have de-risked that. And if I look at the equity cushions that are in those loans when they're underwritten, they have risen to about 50%. So the stock, the enterprise value would have to go down a lot before you get into trouble territory. So I actually see private credit still very much on solid footing, despite the many headlines.
All right. Well, I'm glad you come in periodically and remind us of all that. Let's talk about some of your key macro views. By the way, that report you just put out was phenomenal, absolutely phenomenal.
Thank you, Charles.
Too bad we're not an 8-hour show. We can go through all of it.
We can do it over time.
Okay. Let's talk about the key macro views here. U.S. momentum, European resistance, is that resistance or resilience maybe? Defense, both, right? But defense is a multi-year theme and energy infrastructure. So I want to pull up individually. Let's start with the U.S., right? Because you've got, again, you have some great tables in here. I thought this is interesting that the connection between AI and U.S. corporations and the opportunity here.
I mean, this is one of the tailwinds that the U.S. has going for it, which is this massive surge in productivity growth, which is about a 2 times increase versus before COVID. But you can see the impact that this is having on corporations.
This is phenomenal. I don't know that people can really see, like, we're talking 2021, almost 450,000 sales per employee.
Per employee versus 650,000 today. So that is quite meaningful. And what it's doing, Charles, on the left-hand side of this, it's really helping the profit margin. If you think about everything that the companies had to absorb last year, it's the tariff increases, it's all the volatility, and here we are looking at the net profit margins, and it's expected to go higher. I think AI and just a solid economy has a lot to do with it.
Real quick, though, the news from Block last week that they were letting people go, not because the business is struggling, but more or less because they could. I mean, that will add to a chart like this.
That's right.
Some are hoping that maybe at the back end of this, you'll be able to hire some of these folks back in different jobs.
Yeah, the thing that I do worry about is I do think there's this desire to boost productivity, and that desire is translating into laying some workers off. Right. So I think we'll probably see that show up in the numbers first before we see the job creation show up fully.
Right. I agree. You've been really pounding the table on these tax refunds. A lot of folks talk about it in passing. You really talk about it being seriously impactful as well.
I mean, you look at the tax refund and you say, oh, fine, it's a one-off increase. But I think what's really remarkable about this, Charles, is this is a broad-based phenomenon. If you look at the chart on the right-hand side, you'll see that for the bulk of the population, 90% of the filers are going to get some sort of a tax cut. Right. Maybe it's a refund, maybe it's paying less in taxes. But that's really meaningful because if you think about the engine of the U.S. economy, it's the consumer, which based on this and other factors is doing great. It's the corporation, which is another thing that I'm encouraged by. If you look at corporate capex, it is picking up, it is recovering, and it is broader than just the AI capex numbers. So all of that feeds into it.
I mean, politicians may quibble, but it's the 80 to 100% who've been spending the money and keeping the economy going, the 60 to 80%, the 46% who want to get in there and they want to have some fun as well. I mean, again, this is a major, major boost. So, all right, we've got the U.S., right? I want to talk a little bit about defense spending as an investment theme, because what you're saying is that this is not a flash in the pan. Your chart goes to 2035. You're really talking about, a sustained sort of tailwind for an investment.
That's right. So the 2035 is the target adopted by NATO to get to about 5% of GDP spending. And if you dissect that and translate it to nominal dollars, that is over $1 trillion in additional defense spending. These targets were adopted before this week, before what is happening in Iran and the Middle East. And these numbers do not even include the spending on defense that is happening in Asia. So we very much stand behind this theme. And I think the developments of the last week reinforce it, re-underwrite it. And if we think about the reinvestment and replenishment cycle that will have to go into defense, it's going to be pretty broad scale.
And quick, let's hit on energy, because You spent a lot of time on nat gas.
Yeah.
And again, nat gas doesn't get the press. We always talk crude oil, and of course, more recently, the electricity crisis. How does nat gas fit into all of this?
So this is a big deal globally for the US and Europe, and the way it fits in is data centers. How do we power data centers? A lot of that will come from natural gas. You can see, for example, that we're expecting a 14% CAGR growth in data center demand, and 37% of that is going to come from natural gas powered electricity. We're investors behind this theme. We invest in independent power producers that are natural gas based. We invest in mobile power to get it to the right location at the right time. So this is what I would call an example of mission critical infrastructure, which once again is just reinforced by everything that we've seen this week. You have to have resiliency, safety, security of infrastructure, efficiency, and some of the natural gas power production is right front and center there.
Great stuff. Great stuff. Phenomenal
Thanks
report.
so much. We'll do the rest 60 pages next time.
Okay, good. We're both young. We'll get through this over the next 18 years or so. All right,
you.
folks, coming up.